What do you tell your peers? Like when you're talking with other credit union CEOs, do they raise questions about why is Buckeye privately insured? What are the pros and cons? What are some of the things that you're able to tell them and the points that you want them to know?
They feel like being insured by the government is a warm blanket. And I tell them, I think you need to take that blanket off, because the reality is there's so much more flexibility in having a partner that is not both your regulator and your insurer. That's what a lot of these other credit unions are missing by not working with ASI, is that partner to improve business.
ASI's mission and growth is really to help credit unions grow within their mission and their community, and we'd like to be able to offer that in many more states. Some of ASI's goals over the next 5 years is to continue to expand private insurance and to having that option available in more states for the benefit of more credit unions.
What other areas do you think that ASI brings value to its credit unions?
I think that ASI is just really good at being personable. You know, I've gone through and worked with NCUA in mergers, for example. It's very much by the book, check mark, this is what it is, there's no flexibility.
One size fits all.
One size fits all. Whereas ASI understands that, look, every credit union is built a little bit differently.
It's about us understanding their needs and their membership, getting to know them and their regulators, and working alongside them for not only the good of the credit union movement, but also for the benefit of the membership.
Why would credit unions that might not want to be privately insured, why would they still want the option of having private insurance in the marketplace? What's the benefit for the industry as a whole?
Competition is always good. You want to have competition in any aspect of business. So if you don't have private insurance, who will then hold the federal system accountable?
One of the most interesting findings in my research was the fact that state charters seem to be more popular in states that permit private insurance. In particular, I looked at the 7 states where in the beginning of the century, in the year 2000, they had a little over 40% of credit unions in those 7 states had state charters, and about 35% of credit unions in the rest of the states had a state charter. 23 years later, at the end of 2023, the proportion of state charters in the ASI states had actually risen by a few points, and the proportion of state charters in non-ASI states had declined. It's undeniable that the proportion of credit unions with a state charter in ASI active states is rising, and it's falling in all the rest of the states.
Private insurance might not be right for me, but I at least want to have the option of that in case the federal insurance program gets heavy-handed or out of line or overreaches in some way.
One of the main advantages of dual chartering for the system as a whole is that it is more conducive to innovation. And this is through the history of dual chartering banking and also dual chartering in credit unioning. If you think of the FDIC for banks or the NCOA for credit unions, they have a huge responsibility to take care of 5,000 institutions. And it's pretty hard for them, with the big risks they would face, to allow experimentation or innovation away from the norm. But if you think of an individual state, first of all, the state supervisor is much more attuned to and aware of the conditions in that state. They're much more likely to know what might or might not work as a new innovation for the credit unions to undertake. And also the risk is much lower of trying something out in an individual state than trying it out for the entire country. So historically, dual chartering allows more innovation.
We were able to put together a program for the Department of Defense and provide deposit insurance for the overseas military banking program. It was something the federal solution couldn't do, but as a private insurer, we were able to innovatively come up with a unique product that served the needs of that program.
If a credit union wants to come up with a new idea, in addition to going to their state to get permission to do it, they can go to the highest level of ASI and get the senior management of ASI to look at it, and they're more likely to get a more nuanced reaction and an evaluation of their proposal. ASI has been around for 5 decades now, so they've been around a long time offering deposit insurance for credit unions. And no insured member has ever lost anything in an ASI insured credit union. They have come through thick and thin. They've come through some pretty tough times. And throughout that entire process, they have remained viable and well capitalized.
My advice from a state that allows the private share insurance option is why not? It's just another tool in the toolbox to better serve the citizens in your state, your local community, and allow the credit unions to have membership and service flexibility moving forward.